Welcome back to our course on financial accounting. In this second lesson, we are going to demystify the core of all business reporting, the financial statements. I'm Professor Matt. In our first lesson, we looked at how individual transactions are recorded. Now we'll see the final product. Financial statements summarize everything a business does financially, giving stakeholders a clear picture of its performance. Think of it as the ultimate summary. Instead of looking at thousands of individual sales or expenses, these statements group that data into a coherent story that tells us exactly where the business stands. The goal is simple: to provide investors, creditors, and managers with the information they need to make smart decisions. Without these reports, everyone would be operating in the dark. There are three major statements that every student and professional must master: the income statement, the balance sheet, and the cash flow statement. Each one offers a different lens on the company. Let's start with the income statement, also known as the profit and loss statement. This report summarizes the company's operating activity over a specific period of time, like a month, a quarter, or a year. Its primary job is to show performance. By tracking revenue and subtracting expenses, it answers the most fundamental question in business: did the company make or lose money during this period? Next is the balance sheet. Unlike the income statement, which covers a duration, the balance sheet is a snapshot, a moment in time that shows the company's financial position on a specific date. It details what the company owns, which are its assets, and what it owes, its liabilities. The difference between the two is the equity, representing the owner's stake in the business. It's the ultimate test of stability. Finally, we have the cash flow statement. This report acts as the bridge, combining information from the first two statements to focus entirely on the movement of actual cash. It tracks where cash is coming from and where it is going. This is critical for understanding liquidity, whether the business has the cash on hand to pay its bills today and invest for tomorrow. Together, these three reports provide a holistic view of a company's health. Mastering how they work together is your first step toward true financial literacy and professional success. To recap, financial statements summarize transactions to inform decisions. They are the language of business. In Lesson 3, we'll learn how to analyze these numbers using key ratios. See you then.